Hello, everyone, and welcome to Lucid Trading Systems. In today's video, we'll dive into the technical analysis of a few currency pairs in the Forex market. We'll review last week's performance, identify trends, key support and resistance levels for the upcoming week. And we'll also discuss entry strategies, stop loss placements, and take profit targets. So let's dive into the chart. First, we'll look at US dollar and Japanese yen currency pair. So this indicator you see is the world's most effective indicator designed to simplify market analysis. It is a product of my experience and a proven trading strategy. And I'm very excited to share that strategy with you. So let's look at the chart. What we see is two red lines and two orange lines. So the red lines, we use them to understand the trend. To simplify, if the candles are above the red lines, we consider the market to be bullish. If the candles are below the red lines, we consider the market to be bearish. But if you see here, the bearish momentum did not continue. That is because the orange lines you see did not break the red lines. If it breaks, then the bearish momentum would have continued. I'll show you a few more examples in the same chart. You see here, candle closed above the red line. The orange line also crossed and the movement continued. You see here, candles broke the red lines, and the orange lines also crossed the red lines. The movement continued. If you see here, it's the same example. The candles broke below the red lines, but the orange lines did not break. So it reversed. So this is the easiest way to analyze the market using this indicator. So let's talk about what can happen this week. So markets can open somewhere here. It can trace back till orange lines and bounce back. Or it can break below, take support at these red lines. And then reverse from here. So we'll only look for bullish opportunities as the candles are above the red lines. Now let's look at GDP, GBP, and USD. So if you see, it's the exact opposite of USD and Japanese yen. The red lines are above, orange lines are below, so it is bearish. If you see here, then crossed, orange line also crossed. It was sideways, and then it gave a move. So it is the strategy is very simple. The indicator will do all the analyzing part. You guys just have to wait for the opportunity to enter into the trade. So if we look here, let's see what can happen this week. So the market, this currency pair looks bearish. So if it gaps up, if it gaps up, it can reverse from here, or it gaps down where here it will retrace back to this orange line and continue the move. So these are the entries, with these being the stop loss. Now look, let's look at Australian dollar and US dollar. It is trending the same way as the British pound and US dollar. So it's the same thing. Red lines are above, orange lines are below. So it's bearish. So we'll only look for bearish entries. Are we gonna look at and candle ups down, it traces, then we'll enter here with this being the stop loss. If it gaps up, we'll wait. If it gaps up, we'll wait for it to retrace from here, and then we'll take the entry with this being the stop loss. So when red lines are above, the orange lines are below, we'll only look for bearish trades. When the orange lines are above the red lines, like in USD JPY, we'll only look for bullish trades. So let's look at New Zealand dollar and US dollar. It is also the same thing. Red lines, orange lines. It gaps down and it traces here. This is the entry, but these being the stop loss. It gaps up. We'll wait for the opportunity. We'll wait for it to touch and reverse, and then we'll take a trade with this being the stop loss. So New Zealand dollar and US dollar, Australian dollar, US dollar, British pound and US dollar, these three pairs always trend the same way. Now let's look at gold. Now we have a unique situation. So the red lines are here, the orange line is between. So this is a sideways market. We don't trade when the candles are between these zones. So, red zone. We'll wait for it to either cross this range or this range. And we have to wait for the orange light to either go like these to support the bullish momentum or to break down to support the bearish momentum. That is when we look for the trades, or else we will not trade this pair. We can look at the other trades. So this indicator works on every financial instrument. This is the world's most effective indicator. Like I told you, it will work on Bitcoin. You see, see it retraced, bullish move. It retraced, it's from here it reversed. So don't consider this as a bullish move unless the candles close above the orange line. And if the candle closes above the orange line, then only we'll take the bullish trade. If not, we'll wait. We'll wait till the orange crosses below the red, or we'll wait till the candle goes above this orange thing. Based on that, we'll take the trade. So that wraps up this week's technical game plan. Let me know in the comments which setups you're keeping an eye on. Don't forget to subscribe to stay updated on market insights and weekly plans. Thanks for watching.